Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today started his real estate investment career in 1989 and has acquired over 700 properties, including 2,000 multifamily units. His company now controls over $200 million of real estate. Brian Burke is president and CEO of Praxis Capital. Brian, welcome to Purchase to Profits. It's great to have you on the show.
It's great to be a part of it, Seth. Thanks for having me.
Yeah, you're very welcome. It's my pleasure. So to kick things off, let's hop into your real estate goals. What is your current goal with real estate?
Well, geez, that's a great question. I think it changes by the day. Market willing, we're kind of on a trajectory to 10,000 or more units. Maybe we'll get to 15,000. Who knows? I kind of set a soft goal this year to acquire 1,000 units this year. And I entered January 1st with 539 units in contract. So I'm halfway there, and it's only February 7th as we're recording this. So I got plenty of time to get another 470 more to beat that goal.
We'll just have to add a couple zeros at the end just to ramp it up a bit.
That's all it takes. Yeah, absolutely.
Yeah, I'm always interested because you mentioned unit count. It's always fascinating to me how some people choose number of units, some people choose a dollar volume, some people why did you opt with a unit count for your goal?
Well, I guess because it's just easier, it's easily understood. It's funny, we're in a lot of different markets and prices vary, and I suppose there's a difference between buying $40,000 or $30,000 units and buying $120,000 units. And, we're kind of in that, a couple of years ago, I bought two buildings for over $500,000 a unit. And, they were 33 units. It was like $20 million a building, kind of something like that. And so it's like, they're both misleading. Whether you pick unit count or dollar volume, it kind of doesn't matter. You can spend 20 million and get 30 units, or you can buy 100 units and spend 5 million. So, I don't really know what's the best way to define it.
Yeah, no, I think that's very fair. So would you say you try and grow, let's say 20% a year? Would that be a good way to put it then?
Well, probably not. We we had pretty slow growth for a while there, but we're on a pretty strong trajectory now. And we had a couple of years where we didn't add any multifamily units. We had a few years where we added quite a few. But now what's happened is the business has kind of reached this critical mass where we've got an incredible following from our high net worth investor base on one hand. And on the other hand, we're attracting the interest of institutional investors who are helping to fuel our growth even faster. And so it's kind of funny, once you reach that 1,500 or so unit mark, it puts you into a different category where now your growth begins to happen a lot harder. Kind of like you say, well, how do you make $10 million? Well, the easiest way to make $10 million is just to go make the money. But that's easier said than done. But after you've made that first million, the next 9 is a hell of a lot easier. So it's the same thing when you're buying multifamily units. That first 1,500 is like hell, but after you get to that point, it gets a lot easier.
Yeah. So let's go back in time then to when you first started the company. How has your mindset changed from that beginning growth phase to now where, like you said, you've reached that critical point?
Geez, well, I started 30 years ago. When I first started, I had a goal, and my goal was to buy one house a year. And if I could do that, by the time I would want to retire, I could have, 30 or 40 houses. And I thought that would be a great way to kick off a real estate investment career. And I'd be far ahead of anybody I ever knew. And, so goals change. Now, 30 or 40 houses wouldn't really move the needle too much in what we've done. We've done 730 something. And so, you're just always kind of moving the target a little further down the road.
Yeah, for sure. But well, what made you switch from that single family focus to multifamily? Like, was there something that happened that kind of had the light go off?
Well, investing in real estate is kind of like navigating a stream that meanders through a meadow, right? And
Yeah.
the stream kind of goes left and it goes right, and if you row in a straight line, you're going to run aground, right?
Yeah.
So the one thing I knew for sure is that as the opportunities in the market changed and as the market itself changed, I needed to change my focus and my strategy if I was going to have any longevity in this business. And so, the only way you survive for 30 years of doing this is to shift as the conditions change. And so, when the market collapsed in '05, we went heavily into fix and flip single family, and we're doing over 100 homes a year. And it was a great business, but you look at it and say, well, what's going to happen next? There's foreclosures everywhere. We went from 30 foreclosures a week to 300 foreclosures a week, in one county. Well, that's going to stop, right? And then when that stops, what are you going to do next? And that really was the catalyst for giving a lot of thought to, hey, we got to have a business that's sustainable for the long term, scalable, where we can make this big enough to put all this investor capital we've been so good at raising to work. What business would that be? And that business, in my opinion, became multifamily. That's where the opportunity went.
Yeah. And what kind of drivers are you looking for when you're trying to look ahead and find the next best or the next step in your business? Like, what are the indicators you're after?
Well, an indicator that shifted me from single family to multifamily, just as an example, was just looking at the foreclosure rate and seeing, okay, this is a limited lifespan opportunity. So what else can I do? So that's first thing, is an indicator to tell you that what you are doing is probably something you're not going to be doing forever, right?
Yeah.
And then you start to seek for an indicator that tells you where the next opportunity is. And we were looking at declining home ownership, a more of a increase in renter by choice mentality, shifting kind of demographic trends and preferences. More living kind of in smaller spaces and all of those things, then you couple that with job growth and, inward migration to new cities where people are moving to a new city where, a lot of times if you're moving to a brand new city, you don't just go out and buy a house first thing. You might go rent an apartment for a while and see what neighborhood you really want to live in before you move up to home ownership. So where can we, buy apartments where people are moving to and getting jobs and where the businesses are going? And, all of those indicators pointed to buying multifamily in a few select strong markets.
Yeah. And like you said, you've been doing this for a long time. Your company's been around. What things do you feel that you've done to structure your company that's made it possible to exist when other people come and go, with the moon?
Yeah, it's tough to survive, and
Yeah.
the problem in this business is we always say you're only as good as your worst competitor, because anybody can just outbid you and drive up your price, right? So
Yeah.
it's definitely a relationship business. I think the key things that we did was we built up some really good relationships with the gatekeepers to deal flow. We built up great relationships with investors. We performed well for investors, which gave them a good reason to be loyal to investing with us and referring friends and colleagues to invest with us as well. And, just building that goodwill and having a very, very high level of integrity is what people are looking for when they're doing business. And, there's a lot of people that think that investing in real estate is like a late night TV, hey, I just learned this new boot camp trick kind of a business where you can be here today and gone tomorrow, there's, there can be people that are unscrupulous, or they think it's a get rich quick scheme, and, they're just kind of in it for a fast buck, and they don't realize how damn difficult it really is to be successful in this business and how much work it takes. So if you're going to survive, you're going to have to bring a very high level of integrity, because you're going to need that kind of a track record and that kind of a reputation in order to be around for a while. You can't treat this as a here today, gone tomorrow business.
Yeah. And so, as a younger guy starting out, not saying you're old now, but we're going back. So what, as a new person starting your company, how did you bring that integrity from the start? Just because somebody might be watching this and, they're interested in starting their real estate company, what sort of things did you do right at day one?
Well, integrity is a personality characteristic. You kind of either have it or you don't. But, life is full of conscious decisions, and every decision you make impacts your future, and people have to keep that in mind. And you always have to consider, how you react to a situation and how people are going to interpret your reaction and your performance, because that's going to gauge what happens later on. I'll give you a great example. We had a deal that was just an absolute nightmare. And, it was an apartment complex we bought after the market collapse. And, we thought we were doing great because we bought it for half of what the last guy did. He lost it in foreclosure. We're picking it up at a steal. But it was like 6 months too early. The economy absolutely collapsed after, right after we bought the property. The real estate market already collapsed, but now the economy collapsed. So it was a double whammy. And what happened at the property was the tenants moved out, because they lost jobs and that sort of stuff. And, the income of the property fell so strongly that we only had enough money to pay the expenses of the property, the payroll expenses and repair expenses. There was no money left over for debt service. So, we had a choice to make, right? Do you just let the property go into foreclosure? Do you tell the investors you got to contribute more money to keep the deal afloat? What are you going to do? And, what I did is I dipped into my own pocket and started making the mortgage payment on my own. It was $15,000 a month. And I actually ended up doing it for like 4 years. But the reason I did that, and, imagine the conversations at the dinner table of like, honey, can't we go on vacation? Why are we putting money into this loser deal? And, the truth is it's like, well, because if we let this thing go, our reputation is shot, right? The investors are going to be upset. We're going to lose their money. The lenders are going to be upset. Our credit's going to take a hit, and all these negative things are going to happen. And, we have to think about the future. And had we just done what a lot of other people did, which was just to let the bank have the property back, we would have been, our business would have been really, really short-lived after that point. But we didn't. We did the right thing because we've never lost a dime of investors' money. I wasn't about to start. And, it's just how you react. And where do you get a characteristic like that? I don't know. I mean, I was at law enforcement before I became a real estate investor. And, I guess when you are kind of ingrained and taught to protect the public and take a bullet for someone, you carry that into this business too.
Yeah. How many sleepless nights did you have trying to figure out what to do? Was
365 a year.
Fair enough. So out of all, we had mentioned that you have you've done about 700 and what was it, 35 deals, something like that?
I think that's the number as of this week, or maybe it's 745. It's somewhere in that neighborhood. Yeah.
But low 700s.
Yes.
Is there one that really stands out besides that horror story of as a keystone deal?
Gosh, that really is the standout. But
oh, really?
I could point to a few others. We've had. Let's see. Let me think of something that was that's kind of interesting. Well, we have one going right now. Actually, the 539 units that we have in contract is in some respects a standout deal because it captured the attention. A project of that scale captures the attention of very large investors as they're seeing like, hey, well, you guys are really doing some real stuff, right?
Yeah.
And so we had some very interesting conversations leading up to funding for this deal. And we were negotiating on another deal that was like a $60 million deal that we're still under negotiation on, which could put us in contract for $100 million, to close in the next 60 days, no pressure.
Yeah.
But the reason it's a standout deal is because having these conversations with these larger investors was, attracting larger and larger and larger investors. And we had a really interesting conversation a couple of weeks ago from an investor who, essentially the way it boils down to is they want to invest $300 million with us to buy, 5,000 to 7,000 units over the course of the next couple of years. And, if that deal comes together, that will be a standout moment in the growth of our company. And it's interesting how one deal always leads to something else. And sometimes you do a deal where you go, gosh, why, the numbers work on this deal, but do we really have to buy this deal because we've got, this and that in contract? One more is going to be, challenging to layer on, but that one deal that you layered in could, open a door to something you never saw coming. So it's just interesting how this business works.
Yeah. No, that must have been a really exciting phone call to get.
It was a good call.
Yeah. So what would you say then, because you mentioned that the larger deals attract more interest. If somebody's out there syndicating right now, let's say 100 unit deals, would you encourage them to step up their game and go after the bigger fish?
No, I wouldn't. I would suggest that you stay in your lane because what's going to happen is you're going to grow organically, right? If you're syndicating 100-unit deals, build a significant enough portfolio that it gives you enough scale to get noticed. Just by hitting singles, you don't have to go for home runs and grand slams every time. Hit singles. Buy deals that are within your credit limit. Right?
Yeah.
Stuff that you can close on, because there's no bigger nail in your coffin than to try to expand too big too soon and end up having to back out of a deal that you couldn't close on, and you have egg on your face with the brokers, with the investors, and with the lenders. So if you want to be taken seriously in this business, there's only one way you can do it, and that's to close deals. So if you've gotten good at closing 100-unit deals, keep closing 100-unit deals. If you want to do 125, 130, 150, inch your way up, that's fine, as long as you have the resources to do it and you have the investors to fund it. But don't try to jump from doing your first 100-unit deal to doing your second deal being a 1,000-unit portfolio. It just doesn't work that way.
Yeah. No, that's good advice. Though, let me ask you this though: what changes have you had to make for yourself and your company to jump up to those larger deals? Like that stuff doesn't happen overnight. It must have been a concerted effort to say, hey, listen, I want to go after these larger projects.
Well, again, we've been in this business 30 years and we've just been in these large scale for the last, 10. So it took 20 years to get there. And then it's taken 10 years to grow it from, doing larger scale deals to now doing institutional grade stuff. So it takes time. And, anybody that just, was up till 3 a.m. watching a guy on a boat with sailing through the Florida Keys talking about how rich he got real estate in a year and thinking they're going to replicate that result needs to understand that set your expectations properly, because this is a long road and there's no shortcut. Yeah.
Do you want to talk a little bit about what it's like competing against the institutions going at, at the level you're playing at now? There's going to be some pretty hefty competition from some big players. How do you compete against those other institutions?
Well, it's generally a relationship business, so it's better to not compete against anyone. And, if you have a reputation with brokers as being a closer, they'll bring deals to you and say, like, look, I've got authorization to bring this to 3 clients. You're one of the 3. Take a look. And now you're competing against a couple other people. Ideally, those principal-to-principal transactions really carry a lot of weight. Having said that, it is competitive on marketed deals, and we chase marketed deals all the time, and I think we have 50 in our queue right now. And we analyze them, we underwrite them, we tour them, we take a solid run at them. We draw a line in the sand as to how much we can pay, and that's what we offer. And if we get outbid, we get outbid. And I think we get outbid about 100% of the time. And while that may seem like a huge waste of time, what ends up happening is a week, a month, 2 months, 3 months later, we get a phone call saying, oh, geez, the first buyer fell apart, deal didn't come together, whatever the case may be, and the thing falls back in our lap. So we stay disciplined. We cover a broad area. We look at a lot of product. And we wait for the right deal to come to us.
Yeah. And as part of your strategy, let's say you lose out in an offer in a multiple bid situation. Do you follow up with that broker consistently post offer?
Well, let's just say they don't go to bed a single night without remembering our name.
I like that. I guess Valentine's Day is coming up, so I'm sure you'll send them some Valentine's Day cards and stuff.
I'm sure we'll have to do something.
Yeah, that's great. So, how has getting into real estate and building up your business changed your life?
Well, it's when I got into this business, I didn't have a dime to my name. I had, no hope for any kind of, real retirement. I was working nights and weekends, and I probably would still be doing that. And, now life is considerably different. And, I never would have gotten here without real estate. And, I love what I do. And I think that is really the crux of it all. You can't be successful if you're not enjoying yourself.
Yeah.
And I enjoy every minute of this, even the times that are stressful. It's still, I'd rather be doing this than anything else. So in that respect, it's completely changed my life. And I can't believe, looking back on, where I was when I first, made my very first real estate investment to today. It's, you'd think this was two different lifetimes.
Yeah, no, that's so true. Well, Brian, if somebody's looking to get in touch and learn more about what you're doing, where can they find you?
The best place to find me is one of two spots, either on biggerpockets.com. That's probably the best place to find me. Or through our website, which is praxcap.com, which is praxcap.com.
Perfect. And so just want to say thanks so much for taking the time to do this. I really appreciate it.
Thanks for having me on.
Yeah, you're very welcome. And to our viewers, I wish you well in your journey from purchase to profits. See you next time.